From the floor of the CME Group, this is Danny Riley on today's Cash Clues. Ooh, these markets are really something, aren't they? The name of this video, traders, the S&P 500 futures mid-month rebalance and the crude oil options expo squeeze job. The high of the day in the S&P came in at 1927.5 at 2 o'clock Central Time. The low came in at 1871 even early, or at 9 o'clock in the morning Central Time. And last, on the 245 cash close, we're trading 2017 half. We're up 36 handles. That's a 56 handle move from the Globex high to low. Unbelievable, huh? Total volume, we have 3 million minis traded and 5,000 big S&Ps traded in the pit. Tomorrow's economic schedule actually is the busiest of the week, and it has more Fed speak than any other day than the week. It starts out with the PPI-FD number, retail sales, the Empire State MFG survey, William Dudley from the Fed speaking, industrial production, consumer sentiment, business inventories, John Williams from the Fed speaking, the Baker Hughes rig count, and Ron Kaplin from the Fed speaks. Now, guess what, traders? I got something for you. This week isn't over. We still have the January options expiration, and the stats are exactly what they were today, on today's bullish day. Up 18, down 14 of the last 32 occasions. To me, what I think is we're going to have a continuation and a little bit more upside here. And let me explain why. The exchange is closed on Monday for the Martin Luther King holiday, but on our Monday night, or in China on Tuesday morning, they're going to release their PMI numbers. And while I kind of want to say, hey, I want to start to say that I think that we're getting close to some type of lower, that the coast is clear, I just don't know. I don't know. Things are so unstable, and there's so much fear out there, and the VIX, even when the futures rally, doesn't seem to want to go down that much, and that's usually not a very good sign. You tell me. I mean, come on, you guys. Speak to me on the YouTube channel, because it's really important that I know you guys are looking at and listening. I don't want to be out here doing this for nothing. And then let's see. Look at, what was I going to say? Oh, yeah, I told you about the CME being closed. And then the last part about this, look, as we started talking about 1950, 1960, 1970, we got to 1943. We start thinking about 1850, 1840, 1830, we get down to 1971. Everything's stopping short on both sides. But that said, I still think there's a good possibility tomorrow that we go up, and I do think that there's a good possibility we can get back up toward 1950 or higher. I don't think, was what I was going to finish this by saying, is I think there's going to be a little reversal of that thing I've been talking about, where we get weak on Friday, then we get weak on Sunday night, weak into Monday, and then we have that turnaround Tuesday because we're closed on Monday. So that's going to get all thrown off. And I think based on that, things will thin out is because of the holiday. People will start to leave early tomorrow. Volumes won't be as heavy as they were, I guarantee it, unless there's some big calamity overnight that we don't know about, and I don't think that's going to happen. And I'm going to finalize this by saying, look, I think you guys know I work pretty hard, and I'm not out here to tap myself on the back. A lot of this stuff that I do is because I want to do it. I could walk right now and never do another video again, and nor would I have to be part of Mr. Top Step or any of that. I could just go off and trade on my own. But I do have a natural concern for people. I do worry about when the markets move sharply and people lose a lot of money in the beginning of the year and they're not using proper risk control. In fact, I heard from a broker today that they've blown out more accounts in the first week or the first 6 or 7 days of this year than they did throughout almost all of last year, including the August 24th down move. That says a lot about what people are doing in the beginning of the year. And again, I want to point out, we have a whole year ahead of us. You don't have to go crazy. You don't have to lose a bunch of money in the beginning of the year thinking that you have to put up a bunch of money on the board, because with the markets this volatile, unless you're willing to take these little losses and catch it correctly and ride those things, you're really in danger of losing a lot of money. And I'm not saying not to trade. I'm saying to be more careful and be more patient and really make sure you're using stops. A lot of guys out there don't care. I said it on a video earlier the other day that, and I've got a good friend, I talk about this all the time. He does a lot of trading, and I continue to tell him, look, they don't care. The brokers just don't care if you lose your money. And at the end of the day, your family does, you do, and guys like me do. We just don't want to be part of that. We don't want to see that happen. And anytime I can help people, I'm always around for that. But that said, I'm going to leave it like that. I'll see you guys tomorrow on the opening print.